Investing in property is an exciting journey, but it can be full of pitfalls, and even the most experienced buyer can get into trouble if they aren't careful. And that's easily done because no matter how much you know, there's always something you don't know. And despite the huge increase in consumer prices, the Bank of England has now retreated from its proposed quantitative tightening back to quantitative easing. So there's a kind of a transition, and we're seeing changes in terms of interest rates, and of course also in terms of fixed rates and mortgage interest rates. From what they were a couple of months ago, they're pretty much doubled now in terms of the fixed rates available. What is inescapable is that the government, under the previous Prime Minister Liz Truss, lost the confidence of many in the marketplace, and we saw the adverse effects of that globally. And then of course Rishi Sunak came in, and he and his Chancellor have presented their autumn statement, and now he's obviously working towards gaining the trust of the marketplace. So time will tell how well that's going to perform. The government's borrowing costs are now greater than those of Greece or Italy, despite having a much lower ratio of debt to gross domestic product. And to be precise, it's 86% compared with 157% and 122% for these two countries respectively. So you can see the considerable difference, and we now need to obviously find a plan and a way of improving that situation. And like I said, taxation is going to be how the government will deal with that to some extent, alongside possibly austerity, which I think is a big mistake. For retail investors, one conclusion is that the Bank of England's mandate to ensure financial stability has trumped its obligation to control inflation. And right now the big challenge, of course, is to bring inflation down from double digits to single digits. And the Bank of England predicts it will be at around 5% by the end of 2023, and the year after back down to 2 to 2.5%, where it was not so long ago. Investors should also realize that most Britons will be poorer because inflation is eroding living standards. So we're all paying more for probably less, I'd say. And you've seen the increase in energy costs, gas bills, borrowing costs are rising steeply for mortgage holders and also businesses, and it is tightening up very, very, very quickly. Confidence is low, and one thing I can assure you is we have a rocky time ahead, and it's going to be a number of years of pain. Markets now expect the base rate to peak at between anywhere from 5 to 6% in the next 12 to 18 months. And that's going to be the case if inflation is to come down from double digits to 5% or even lower. As a property investor and trainer, I am often asked whether it's worth getting into property right now because people aren't sure, and some people ask, I have a small portfolio, sometimes a medium-sized portfolio, and sometimes a large portfolio. Should I grow it? Should I sell some of those assets? What should I do? Because I think right now, a lot of people out there are expecting a crash at some point because they can see all the signs. They understand the past and history and what lessons that's taught us. So interest rates are going up, inflation is quite high, everything's tightening up, so people are anticipating a downturn. And as a result, when people are worried about property, rental income, investments, what do we do when we're confused or we're unsure or we're uncertain? We wait on the sidelines, we're waiting for events to unfold to see what happens, and then of course we're thinking property prices might come down. If they come down, I'll buy it for less, so it'll be a much better investment. Now, I agree with the majority of people out there who say there will be a market crash at some point and it's going to come soon. I can see that. But I disagree with those who might be saying, well, wait until it happens, because I think that's not the best strategy. I've seen people who do really well in a property downturn, okay, compared to when the market's going up, because anybody can make money when the market's going up. The smart people are the ones who make money when the market is going down, because they learn the rules and they know how to operate, they work to a particular criteria, and they're smart about their investments. So you've got to be even smarter now and not take as much risk. But I think sitting back and waiting for events to unfold, in my opinion, isn't the best way to go forward. And I'm an accountant, I'm supposed to be risk averse. But I have a very different view on how we should actually be investing. And as the market's tightening up and we've got tough economic times, it's going to be more likely that existing landlords who have a good track record are going to be able to borrow money. Those who don't are going to find it a bigger challenge, so they might not have a choice, but they might have to wait. So I think in those circumstances, what you ought to be doing is reorganizing your portfolio so that it works for you. That doesn't mean it's going to be impossible for you to buy. What it means is you've got less access to funding, financing, and if your affairs aren't in good standing, then you're competing against landlords who have got a better profile, financial profile, and they might be able to do more deals than you can. But remember, you're not competing against anybody else. You're competing against your own self and your own standards. And as long as you're comfortable with that, you're going to be fine. Now, if there is a recession and property prices go down, rents tend to remain stable. That's what history and experience shows us. And what happens is sometimes people might downsize and rather than being a property owner, end up renting property for different reasons. And therefore it's important to buy property that has good cash flow, and capital appreciation obviously in the future is always a bonus. I think always look at cash flow first. If that investment pays for itself and nets you a profit every single month, then that's good going, and that's what you should be aiming for. Because remember, you want a return on your investment, otherwise you'd put your money in the bank and be comfortable with a low rate of interest and without taking the risk. So return on investment is critical and key, and that's what you should be focusing on. And you really want to get to a place where you have enough property so you can, if you have a day job, afford to stop your day job because you've got the cash coming in. And I did a whole video on that, which is on this particular channel, and you can view that to see my thought on that. Now, when we're in a property bubble or a property boom, it can be tempting to buy properties that are going up in value quickly, even if the cash flow isn't great, because like I said, we all tend to get excited with the next deal in terms of what it's going to be and how it's going to change our lives and how this is the best deal so far. But I think if it's not cash flowing, then you should think very carefully, because you'll be taking a huge gamble. And I think right now isn't the time to be taking huge gambles in terms of compromising cash flow. And if the market moves against you, the result could be negative equity, and that's not a good place to be. And it could be possibly that you need to sell the property, which means you make a loss. It could be that you want to refinance and you can't refinance because there isn't any equity or enough equity in the deal. So you either put more cash into it or you go onto a variable rate because you're on a fixed rate, and that's going to erode your cash. So there's no profit left at the end of the month, and that's not a good place to be either. It's vital to avoid getting caught up in FOMO, the fear of missing out, because I think you ought to focus on a particular formula that works well for you rather than focusing on feelings. Now, just because we've been in a property boom over the last few years, it doesn't mean that every area of the market has been booming. Sometimes when something goes up, something else somewhere else is going down. That's just how the market works. And with that, what happens is some people lose out, some people benefit, some people's expectations are unrealistic, and sometimes certain properties are overvalued, and sometimes people pay too much for them. And you want to avoid being in that situation where you pay too much for a property, and this is a really good deal. Finding areas where prices have bottomed out and are now heading back up due to new employees, for example, that are moving into the area, or there's significant government investment, or there's something else going on locally in terms of regeneration, I think is a critical factor and something that you should be looking at. So when you're looking to buy a property, look at what the local authority is doing, ask around. The information is available there, use it to your advantage, because most people don't, just so you know. And when you find such an area, get to know everything you can about that particular area, because research is relevant and research is important, because most people don't research. So if you do, you're going to be ahead of the game, which means you can buy property at the right place and for the right price, and it gives you the potential for good cash flow. And as I've said before, and I'll keep saying on as many videos as I can, cash flow is king. During a recession, some areas will be hit harder than others, and that's just the way it is. And you'll kind of see that starting from London and then working its way upwards into different areas. Your job is to find those areas which are either undervalued or there's still some scope in the marketplace for you to do a good deal. What you don't want to be going is on this wave where basically property prices are coming down, you join that wave and end up losing out. So again, research is critical. When a crash does happen, with all the work that you've done locally, that's going to help you, because you're going to be investing in an area which is improving as opposed to going in decline. And that's why research is important. Yes, the price you pay for a property, the mortgage interest rate, the rental income return that you get or you can charge, all of these things are going to change. But the fundamentals on why you invest in property and the criteria you have shouldn't change, and in terms of what you're looking to do. Your strategy may change, but the overall policy of cash flow is king, some capital appreciation, buy in good places, buy where there is demand, where there's growth, where you're attracting a certain type of tenant, all of those things shouldn't change, because that's what your business is all about. And remember, bad news is good news. So that's why you'll hear more of it. And that's what the media does, always giving us bad news, doom and gloom, and showing us information which they want to show us because they think people want to hear bad news. Maybe they do. I definitely don't want to hear bad news, and that's why I stay away from the media and news as much as I can, and I research and read articles, journals, magazines, take information from people who I know, like and trust, and that serves me better, because being in this doom and gloom bubble doesn't help anybody at all. You want to be in a positive mindset, and to do that you need to create an environment that is positive for you. And remember, in any economic cycle there is opportunity, and when the situation is adverse, that means there is even bigger opportunity. It's just you need to look for it, you need to find it, and you need to think about taking action. And what that really means is you need to see things from a very different perspective. When the situation changes and the circumstances change, you've got to analyze the marketplace, analyze the situation, and don't just sit back there and enter this world of analysis that leads to paralysis, but instead think, how can I do things differently? And that's kind of the key message I want to share with you, is having the ability and the know-how and the courage to adapt and take action in very different circumstances. Now, I'm a strong believer that if you have the appetite, the mindset, the work ethic, that no matter whether times are good or times are bad, you are going to do well, because your personal values of hard work, research, and being determined are going to see you through whatever challenges that you face. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe, and post a comment, because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here, because it's the next stage in terms of your learning and development.